was the trend following strategy. Now the advantage of trend following strategy is that if there is a very big trend, the upside or in the downside, a trader or an investor who is adopting the trend following strategy would gain a long uptrend or a long downtrend. But the disadvantage is that we learn from the Dow theory. A trend actually is confirmed after a substantial portion of the movement is already there. And again, a trend that has reversed, that we understand the reversal of a trend, is after a substantial amount of that reversal has already taken. So you enter a little bit late and you don't book at top, you book at a little bit lower. Similarly for the downtrend, you enter a little bit late when already a portion of the move is already happened, and then you book a little bit less when already a reversal has taken some of your gains. So that way, if you are not already trading in a very long sustaining trend, then your gains are not that much. But given that market often are in a very longer period of trend, longer moving trend, which takes price for a long distance, for those kind of moves, trend following strategy is very good. Now again, before the trend is being implemented or manifested itself, you don't know that how long the trend would sustain. For that, you need a little bit of gut feeling, you need a little bit of understanding of the overall market, and you can actually, if you think that the trend is going to sustain for a long time, you can approach the market with the trend following strategy. Now, let us begin with that. Our first trend following strategy is using the moving averages. The moving average we take here for the strategy is 9 period and 21 period. Now we are looking at Nifty chart. Here in the Nifty chart, when we look at the trend following strategy, we can see that this strategy is implemented quite good in Nifty, because Nifty has been a trending market either in the upward direction, in the downward direction, in the daily time frame for past many years, and that's why they seem so good when we look at the strategy. Now let me tell you a little bit of the strategy first. First, there are two moving averages, simple moving averages, 9 period and 21 period. Now you go into the trade only when your 9 period moving average crosses your 21 period moving average, right? So you go long into the moving trade or long into the market when there is a positive crossover, that is smaller period moving average crosses. You go short similarly when the smaller period moving average goes below the longer period moving average. So you go short when the smaller period moving average, that's 9 period moving average, go below the 21 period moving average. So basically this is a stop and reverse kind of a methodology. How? Basically you are going long into the market, and now when you are booking profit, you are also getting into the short side of the market. So basically you are always having a position into the market. If the market is not very much range bound, where very regular to and fro movements are there, you will make quite a bit of profit, or I would say a notional profit, because we are not suggesting for trade, if you take into this kind of a strategy. Now let us look at this. See, this is a positive crossover, and you can see that you book somewhere here. There is a slight bit of negative crossover here at this point. Here the price goes down, but you don't book. But here you book because there is a negative crossover. See, but the negative crossover doesn't sustain for long. Soon again you get into a long trade, booking your slight losses, and you get into a long trade with the positive crossover. And now here see, again you book your losses here, and again Now you book your profits here and you again get into a short position due to this small whipsaw. Now again, when there is a positive crossover, you book a small loss and then you get into the trade, you book it here and now you get into a short trade. See, you book it here and you get into a long trade. You get into a again reversal trade here. Then again you book a little bit of loss and then again you book a little bit of profit here and or no profit no gain and get into a reverse position. See, now this one is booked, I think, here. When you momentarily get into a reverse position due to this crossover, but you book small loss, but see the kind of gains you are having. And then again you get into a long position. That is booked here where you get into a short position, but it doesn't give you much loss because you exit around this level only. So small loss you may have to book, but as you go long here, you see the kind of gain you make. So similarly, going forward, we can see that overall you make a lot more gain in a trending market according to this strategy if you are looking at it. But in a very range bound market, see, this kind of whipsaws would be very frequent, so you won't be gaining much during this kind of a scenario. But overall, if it is a trending market like this or this or this, would be gaining a lot.